Good morning, trading world. It is December 15th, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. It is 8 a.m. on the East Coast, and let's get to the pre-market. The title for today's pre-market is Almost Through the Landmines. Where to from here? Well, the good news is there are only about 10 trading days left in the year. The bad news is once this year is over, professional money managers won't need to chase performance anymore, and there will be no need to own any of the stocks they have been chasing up. And they may start to remember the Fed raised rates 7 times this year, and reality may start to set in. Things will start to make sense again. Take example, a stock like CPB, yes, the soup company. I'm not even going to get into the chart, but I just want to bring this up really quick. Campbell's Soup has a PE ratio of over 21 and is trading at multi-year highs. It makes no sense to me. It cannot and does not support a growth multiple of 21% fundamentally. And technically, the chart is out of this world overbought. And there are hundreds of stocks like this that will be the undoing of next year. Not to mention stocks like Apple and Microsoft that fared pretty decently well through the turmoil. They're going to get hit as well. Back to the next 10 trading days. I expect to find a bottom between Thursday overnight and Friday's trading session. One of the things that give me the confidence to say this is one of the things that gives me the confidence to say this is the VIX futures are down a decent amount with the market being down. So I will be looking to get long via some bull put spreads, maybe just a touch. Not sure if the right level will hit to inspire me to put the first on today, but possibly at some point Friday we find the lows and the right time frame hits lows, and I'll have the confidence to step out and get long those bull put spreads. And in doing so, I'll probably leave enough time so that I can break the legs and leave the long puts deep into January. The bigger positioning today will be searching out and shorting a high of the day and hopefully taking profit on more than half by the close today, just in case we don't find lows pre-market Friday and it doesn't last to the bell for profit. So those are the things that I'm watching and looking at doing and game planning for the day. Let's get to the key levels to watch for today. All right, here we are with the key levels of the day. This will start on the support side. We have our Jack support at 394 to the 393 area. Then our Queen support 392 to the 390 area. This will be a key area to watch, this 392. this 392 area to see whether it holds and whether we start to bounce right away and go up first, or still a little move down and then up. And then we have our king support at 389, 385, which these are possibly levels that I'm looking at it maybe overnight, but things could go one or two ways. Like I said, I expect to find lows on Friday, and it may be pre-market or it may be during the day, lunch, before lunch on Friday. Who knows? But I expect to find those lows at Friday's session. So I'll come back to that at the end of the pre-market, because I want to focus on today. Going back to the resistance side, our jack resistance is going to be the 397 to the 398 area. Queen resistance is going to be 399 to the 400 area. And then king resistance is 401 to the 409 area. Pay close attention. If we start to rally, I would pay a lot of attention to somewhere between 403 and 406 as being a high for today if we break through the 399 area. That's if we break through the 399 area. Excuse me. I've had a cold maybe a few weeks ago and feel very well, but the cough just will not leave me alone. Okay. The main thesis for today is bullish, closing above the 399.40 with a projected target high of between 401 and 406. The alternate thesis is bearish, closing below 399.4 with a projected target low of between 399 and 385. The current major channel we are in, that was, when we closed yesterday, it was 397 to 416, but pre-market we're in the channel below that, which is 397, that goes all the way down to 379. Again, we need to recognize the major channel above the channel we just came from is 416 up to 425. And yes, moves could get that violent on Friday that we see those upper levels. We do have dissonance between the technical side, which is bearish, and the quant side, which is bullish. Market strength and breadth seem to sink off the bottom of the chart yesterday, and somehow today there will be most likely a open with a gap down even further in those two metrics. So that brings us into the scenarios of the day. Give me a moment to bring those up. All right, scenario number one is going to be our trend day down day. Being that this is a bit of an unusual week, the structure of the trend day may be a bit unusual as well. On our normal trend day down, we open gap down, start with a big rally back toward the previous close, which is represented by the blue line here. We find resistance on or before that previous close, then begin the downtrend for the day. what could possibly make this an irregular excuse me trend excuse me trend day down is that the rally could seem longer and larger than normal. So we could really pick up and start to trend down pre-market and wind up a decent ways down, which would give us further to go to close this gap. And the further we go down, the longer this may seem like, oh, we're not really in a trend day down because we've had so long of a rally up, when indeed it's just trying to fill the gap and we don't get to this previous close. And that's what makes it a trend day down, because we don't cross over, don't really fill that gap, and then we find our way back down. So this is what I see for the trend day down structure today. Our next scenario, most probable scenario, could be our rounded reversal day type structure. With this, we get a stronger push down pre-market and then find support and start to bounce off of that support and get that continued push higher through the cash open, all the way through until we find resistance around our midday chop, which would possibly be around either the queen, we're going to say the jack or queen resistance. And then after midday, we go back down with the same energy of force we went up with the first part of the day. So that's our rounded reversal day type structure. Our last scenario is going to be our expanded range day structure. We could have an initial grind and chop sideways to up, and then kind of get in gear and take off to that upside before finding resistance once or twice and closing above that previous close from yesterday before consolidating and then continuing back into the down move. So that's our expanded range day structure. Again, I hope this helps. I'm going to continue to stress one of the most important aspects, especially right now and going into next year, is that you must understand and have your risk on point. It is more important than choosing a direction in your trades. I just can't stress how important that is right now, so that you can continue to stay in the game. I always say that your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position, and then managing that risk in accordance to our account size. Again, I hope this helps. We could have what may be a wacky Friday, because we could see something that happens, which is actually happened a couple times this year, but it's not something that usually happens a lot. And that's where we get this kind of lackluster trade that things are okay for a while, and then boom, a reversal hits that spikes and takes everybody surprise and goes 2 to 3 standard deviations, and that would be down toward that 385 and below area. And then we get a spike back up in the same day, almost wiping that out. So that's some of the things that could possibly happen Friday. And that's the thing about trading. It is a reactionary sport or reactionary type event. There's nothing that's 100%. There's no probabilities. There's nothing that's 100% in trading, except the fact that you will lose money at some point. That's the only 100% probability that I can give you in trading. So with that, for the most part, it's reactionary. So we look at the indicators. We look at what this data is telling us at that moment. And we have to make decisions. That's why a lot of times you'll hear me say, instead of support and resistance, I'll call it decision areas. So I will definitely do more on that in tomorrow's pre-market. I'm going to see if I can get tomorrow's pre-market out early. Try to do it tonight at some point, because there's going to be a lot of fireworks tomorrow, and that's demonstrated by the expected move. And if I'm looking at the expected move on the SPY today, we have plus or minus 3.6 as an expected move left for today. That's relatively mild compared to what we've been going through this week, but on a regular day in the SPY, that is still moving. That is not small movement at all. Then on Friday, we still have double that expected move, plus or minus 6.132 as of right now on the SPY. So it's telling you today is going to be somewhat mild compared to the days that we've been through this week. But if you take it out of context and compare today to any other day or average week, this is still quite volatile. So I don't want that to be lost. So that's why I continue to stress risk management over direction. It'll save you a lot. So wishing you a positive trading day. Hope this helps. Let's go out and have a great one.